Welcome to the VectorVest special presentation, this week titled The Acid Test for Worry-Free Investing. Worry-free investing is all about investing in the safest, highest RS stocks in the database and managing or hedging them against downturns. Since nothing goes up forever, not even the best of the best stocks in the marketplace, how do you know when the pullback is over and it's okay to re-enter or buy a stock? Well, Dr. DeLito suggests you give them the acid test. The acid test is a technique he first wrote about in December of 2000. Let's move into the program. From the home page, we'll go into the VectorVest views. And I'm going to set our date back to 2000 and select December the 8th. Here we see the essay that week was titled The Acid Test. And let me direct your attention to the salient points. Selling covered call options and buying puts is a defensive tactic, and precise timing is not necessary. It can be done anytime you think a stock's price is peaking, stagnating, or likely to go down. We've demonstrated these protective techniques in previous presentations, but if the stock's price does go down, we need an easier, faster way of knowing when to play the upside of a fallen stock. I call it the acid test. Take a look at a graph in the weekly mode. Adjust your graph settings to show price, its 10-week moving average, and its 30-week moving average. The time to start buying is when the 10-week moving average crosses up through the 30-week moving average. This won't get you in at the exact bottom, but it will minimize the risk of getting you in while there's further downside deterioration. So let's take a look at some graphs. We'll move over into the Viewers tab and open the Stock Viewer, and we'll sort by RS. This brings the safest stocks in the database to the top of the list, those kinds of stocks we like to trade in our worry-free investing approach. Please recognize that the current market is about 1 month off of its high, and many of these will have pulled back with the market. But there are many good examples illustrating the efficacy of the 10-week and 30-week moving average crossover. So here we're listing 20 stocks. Let's just graph them all. We've opened up a graph for the first stock in the list, PSA, and as I described, the market's been pulling back, as has this stock been. But let's set up the graph for our acid test. The first thing is we want to change the duration of the candlesticks from daily bars to weekly bars. And we'll expand our time frame to 1 year. So now each candlestick represents Monday through Friday price action. Using this longer weekly period filters out some of the noise we see when we use daily price action. Next, let's remove RT from the graph. And let's set up our 10-period and 30-period moving averages. So we have a 40-period moving average. Let's change that to 30. And because we're looking at weekly bars, this would be 30 weeks. To add our 10-week moving average, I'll right-click on Price, hover on Add Moving Average, Simple, and click on 10. It adds it to the list, and by checking it, I can add it to the graph. Just as general housekeeping, I like to keep my moving averages near their underlying source, and so by left-clicking and dragging, I'll move the moving averages of price up next to price. So how do I know when the downtrend is likely over? Let's put a date line. When the 10-week crosses above the 30-week moving average, that's a pretty good indication that that downtrend has ended, particularly if the moving averages are continuing to separate. So as we scroll through these stocks, we can see that moving average does a pretty good job of identifying when that downtrend has ended. Maybe 2 points here on Danaher. ISRG separating here. TJX here. And here. HSIC here. ACN here. And as Dr. Giolito commented, this won't get you in right at the low. We're trying to determine that the downtrend has ended. Turning back to PSA as an example, it can also be a pretty good indication of when the uptrend is weakening. When price pulls back to that 10-week moving average, that might be a good time to start initiating some defensive measures, and maybe even closing the position on the bearish crossover. So as we look at several graphs again on that basis, here on J&J we might have gotten defensive as price pulled back, eventually resuming its uptrend. Likewise here with Church and Dwight. Our defensive measures allowing us to stay in the position until the uptrend has actually broken down. Broken down by virtue of the bearish crossover of the moving averages. Now we know that most of our subscribers look at daily graphs or end of day candlesticks. And again, you can see how much more noise there is on those daily candlesticks. But we have in our program by default an acid test graph layout. As I activate that layout, notice that it already has price, but we've changed the interval now of the moving averages to 50 and 150. Each weekly candlestick is comprised of 5 days. So the 10-week translates into a 50-day. The 30-week translates into a 150-day moving average. And so here we're plotting the acid test on end-of-day or daily bars. If you like the weekly bar layout, I might suggest that you add the 10, and the 30 period moving averages to this layout so that if you toggle to weekly bars, all you need to do is activate the alternative moving averages. And of course you can save that layout with the layout tools. Finally, Hormel, like so many of these high RS stocks, have been great companies to invest in. But before you do, you might just want to give them the acid test. At VectorVest, it's all about combining easy-to-use tools with investor insight. Thank you for watching.